Okay. I think we're live. Gary, can you make sure that we indeed are? And then as soon as I get a confirmation, we can start with the presentation. Hello, everyone that is already on the call. I think additional people will be joining us shortly. We're just sending another email and a tweet about the webinar. So expect more people to join very shortly. But I think we're going to be rolling along in the next few minutes, and then as people come along, we'll onboard them in. All good. Okay. Let me see if everything is good with my streaming. OBS seems to be performing fine. YouTube analytics look good. Okay. And okay, Max, do you want to share your screen? And in the meantime, yeah, okay, so I'll just start by welcoming everyone that's already joining us. Hello and welcome to this one-time webinar from the Santiment team on how to beat the cryptocurrency markets with Sanbase, our flagship platform for market intelligence. So today, what we're going to do, just briefly, a brief overview, is we're going to go over a number of on-chain and social indicators that are available on our platforms, Sanbase, app.santiment.net, and we're going to show you exactly how you can use them to do various things like anticipate the prices of the coin, time, local tops and or bottoms, and in general, how to make more informed market decisions and minimize your risk trading or trading risk. So my name is Dino. I'm one of the content creators and market analysts here at Santiment. We are joined today by Maksim Balashevich, the founder of Santiment, as well as Valentin Michov, Santiment's chief technical officer, as well as various Santiment team members that will also play a smaller part in today's webinar. So a brief rundown of how this is going to run. The exposition or presentation portion of the webinar will run between 30 and 40 minutes. Where we're going to go about, we're going to probably cover around 4 or 5 different metrics and indicators in that time. And then we're going to leave as much room as possible for questions, clarifications, any requests from you guys. So please, if you have any questions during the webinar, we have Gary standing by in the YouTube chat. Please feel free to write them in the chat. So we'll get to each of your questions after the presentation. That's a promise. And if you're not already a subscriber to Sanbase Pro, I strongly also suggest that you guys stick around until the end, because we'll also be giving away some special discount codes that are only going to be redeemable for this week and only for the participants of this webinar. Okay, so that's pretty much it. So without further ado, I'm going to give the floor to Max, our founder, so he can start us off on today's webinar. So Max, I think you're already sharing the screen. Please feel free to go ahead.
Yeah, you see the screen, right?
Yes. I am just going to go full screen myself so everybody can see it better. And yep, we're good.
Okay, cool. As a short introduction, well, we're here all participants who are in crypto at least for some time. But if even newcomer, there is one specific speciality in cryptocurrencies. The way we analyze them should be different, because the cryptocurrency, they don't, or most of them, or almost all of them, they don't have some specific value which you can measure, like no revenues, no expenses. Yeah, everything is has to be done in a different way. There is a growing set of fundamental models, and maybe if we have time, we can touch some of them. But the truth is, in the light of lack of real value in cryptocurrencies, so how do we make price of it? Well, it's us, participant of a crypto market, who make price of it. Yeah, and once involved into the process, well, us, crowd, show specific behavior pattern. Yeah, specific behavior pattern once the trend is established or about to be established, or once the trend is exhausted on both directions, up and down. And here, this is a very good point where we could deploy some data and we can analyze it, and we can establish some framework and patterns and do something which can bring us in front of other traders and investors, give us an edge, give us an alpha. So, and we will talk about mostly, we'll talk about this specific behavior analysis. How can we spot a pattern which are typical for forming top yeah, or emerging trend where you can expect 100 to 200% increase, or things like this. And shortly about sentiment, we gather, or Sanbase as a platform, we gather 3 different sources of data. One is on-chain, so we have full nodes and we get every single transaction on time, and we parse it, whatever it belongs to which project, and to the basket here. So on-chain data, social data, we do the same. And we also see how developers are building their networks, so we can measure how much effort is put there. So these 3 sources of data we use for behavior. Of course, we do also have pricing data, but as I say, we mostly use it for visualization. Like on this chart you see now, this green line is the price of Chainlink. So this is the purpose of us collecting the data, pricing data. Using these different data sources, on-chain, social, developer activities, and also price and volume, we try to build, or we've built so far already, this current version platform where you can spot these patterns. So let's make some examples. The first example is Chainlink. It's a very good one. And here we will touch, like in the first run, we will talk about on-chain, about social data. Yeah, social data, we get it from more than 1,000 different channels, Telegram, Discord, like everything where crypto folks are talking. And social channel has very interesting aspects. It does show quite precisely when the tops come in, and it does show in a specific way. Actually, there are 2 ways. Yeah, there are 2 ways, and actually on this chart we even see both of them. And the 2 ways is like explosive top, when suddenly everyone, whatever the reason, realize why this token is so amazing, and then everyone is talking about it, like literally almost everyone is talking about it. So it's explosive top. And yeah, in behavior analysis, is this realization or finalization, oh, it's so good, it can go only further. It's exactly the point, plus minus few days, when it stops going up and it goes down. And in this example, actually, we see this explosive top. It was like 4th of March, yeah, shortly before everything crashed, when there was a huge spike in talk. But it doesn't happen, like in our experience, it happens like maybe 20% of the time. More frequently, the pattern is as follows. Price start increasing. Let's take from time frame like 26, end of December, yeah? Well, anyway, not so many talks were around it. And the green line is the price. So the price will start increasing. The talks will like jump and drop and jump and drop, but will be more or less, if you take an average for the last month, more or less like in a boundary, like it looks normal. But then you will see first spike out of the boundary, like here, when was it? 31 of January. And this is where the things are getting interesting. Because we all know trends in crypto, they're very fast. It takes a few weeks and it goes from 6 to 16, if a really strong trend. In this case, from Chainlink to 80 to how much did it go? Oh wow, 480, yeah, almost 100%, on 80%, I think. So you will see first spikes, like a crowd getting attracted to it. And if you analyze the messages, you will see they are still not super convinced. But then somewhere in the middle of a trend, you will see strong price increase, and together with it will come strong increase of talks about this token. Yeah, and it's like here it was like at this point of time in my mouse. And it's still a kind of good time, but it's the end of the current trend, or like we're coming to the end. And the end will be marked by specific pattern. Price will push up, talks will start decreasing. Yeah, because this was eclipse, or not apocalypse, it's eclipse. Like they were excited, the crowd realized, oh yeah, this is a good token to hold. Yeah, and everyone jumped on board around this date, plus minus. And the price pushed for some time because the keep token and the waves from the thrown stone going around, but the talks start decreasing, they're falling down. And typically 3, 4, 5 days, it will end, the end of the trend. The crowd will move somewhere else, you know. Crowd never stays with one token. And yeah, this is what we see. The first, it decreased very fast. Yeah, because those who bought early, well, they realized that okay, we cannot pull in a new place anymore. Time to go out. The price will deviate very strong. Sometimes it will be second, last push. It's like double top. In this case, it's even double classic. Not only double top, but an explosive social volume. But then that's it. This kind of explosion volume is not healthy. It would be better if it would be growing more slowly. Yeah, so these two patterns. And actually, now I'm noticing for where we are now. Let me take last month's. Yeah, very similar. Okay, last month's, maybe too little, 2 months.
Max, are you still talking? Because I can't hear you.
Yeah, I also can't hear him.
Oh, I think, yeah, his mic got disconnected or something. Yeah, I was like, maybe he's either in like very deep thought or something's wrong with his mic. Okay, seems to be a Bluetooth issue. Sorry, guys, just one sec. But while Max is trying to fix his mic. Interesting thing about Chainlink is, as Max was showing, this spike in social volume. So one of the social metrics that you can find on Santiment, especially on Sanbase under the Labs tab, is emerging trends. So what we do with emerging trends, it draws from the same source of information as these social volume charts, essentially based on the same data set, so over 1,000 different crypto-specific social media channels. We try to find the top 10 words on every hour that are gaining the most social volume compared to their previous 2-week average. So we're trying to find the top or the most quickly developing stories in crypto social media. And usually what we see when we see a coin or a ticker name for a coin appear on this list, especially while that coin is in a rally or in an uptrend, very often, almost maybe 80% of the times, we will usually think that or consider this a local top, because it basically what it indicates is a social hype around the specific coin is peaking, and very often the peak or extreme values of social chatter related to a coin are correlated almost one-to-one to the price retractions. So we actually have some analysis that we've done recently proving this on a statistical basis. We can go into that right now, unless Max has fixed his mic. Max, can you hear us? Okay, I think Max, if you have
And now,
now
okay?
it's fine. Now it's fine. Okay. Yeah. Okay. Yeah. So
My
do you want to
microphone
go?
playing with me.
No worries. Do you want to
Yeah,
go?
just shortly because I don't want to keep for a long time.
Yep.
So you will see if you start exploring Sanbase on different tokens, it will be more or less similar story. Word of warning: don't rush with your trades, especially if you decide to do any short trades, because yeah, graveyard is full. It's filled with shorters. Shorting in crypto is very specific and dangerous game. But pay attention to it. I would say every time you decide someone is talking a lot and there is a hype around, and decide to buy, look at these metrics before you do it. And if you see this kind of picture you see now, like not much talk, even high price, and then suddenly spike, and you want to buy it, don't do it. Wait a few days. Yeah, like here, there was definitely in many channels discussions of so go metal, whatever they did again with the cut, must buy. No, like, wait a few days, it will go down. If so high social volume, it will be over and over again, regardless which token we take. The only difference is from top 10 projects, but even there you will see the same patterns. I don't even remember what was on 8th of April with Bitcoin.
That was
cash probably halving. Probably halving. Yeah.
Halving. Yep.
Yeah. So yeah, many talks and not the best time to buy. You can consider to leave, but it's not the best time to buy. And I will just whatever here Dino selected. Maybe as an example, Ripple. Oh, Ripple didn't look into it long time.
Yeah, for Ripple,
Actually,
we can actually see some. So this is the case with some top 5 coins specifically that for a lot of mid to low cap coins, the social volume can only be used as a top indicator. Because most of the times when you see the crowd starting to discuss these coins, they're usually not discussing it unless there's some sort of a price related news or price related action. But for specific coins like the ones in the top 5, including Bitcoin, Ethereum, and XRP or Ripple, you can see some spikes also during the bottoms for the coin. And we can observe that just recently, I think that's like April 12th or something, as Ripple was bottoming, there was a spike in the social chatter or the amount of XRP mentions on crypto social media. And you'll see this if you also go over social volume for coins like Bitcoin and Ethereum. You will see the same pattern where the amount of related chatter to these coins will spike not only during the local tops, but also during the local bottoms as well. Because for these coins, they're popular enough that even a downtrend will force a reaction from the crowd. Whereas something like MTL or Metal, even something like Chainlink, which is usually very popular, the only time that it actually invokes strong emotions from the crowd and a strong response from the mainstream crypto audience is when it's pumping. So this is just an additional example of how you can use this social volume metric, particularly for the top 5 coins, in another way as well. So as a bottom indicator as well, not just the top indicator.
Okay, yeah, good point. And then Kyber,
Yeah, we don't have to go over all of them. Let's just show Kyber as well, and then we can.
Yep. Okay. Yeah. Well, in the Kyber case, it was actually a pattern which was typical for this end of push in the March, where we've seen quite strong social, and also we'll show later on-chain activity around this top. But once some coins like Kyber did slightly new top, some others did not. All the data was showing, okay, that's it. It was already decreasing quite significantly.
Yeah.
So this was a pattern of divergence in the top. Okay, so I will not talk engine. I think it will be the similar.
No, it's fine. Let me share my screen for just a sec, Max. I can.
Yes.
So I can show the people what I meant by emerging trends. So basically, this is the night mode. That's why my Sanbase looks a bit different. So basically, if you go to app.santiment.net/lab/trends, and my internet seems to be misbehaving a bit, so it might take a time to load, but you will see this list of top 10 words. And what that list entails is the number or the actual words that are gaining the most ground or most new volume on crypto specific social media channels. So when you see a coin that you're interested in or particularly maybe invested in appear on this list, like for example energy right now, this might be, if you look into the coin and you figure out that the reason why it's pumping, why it's showing up on the list is that it's pumping, this might be a very good time to reduce your position, so to speak. So I'm going to now give it up to Jan for just a brief moment where Jan is going to show us, we've done some backtests on this particular metric. So we have seen so many times the same pattern where when a coin appears on this list, it's almost a given that it is going to dump very shortly thereafter. So we've done some backtests to figure out whether this is just an anecdotal evidence sort of thing, or whether there is actual data-driven results that we can take from this metric. So Jan has done some recent event signal analysis based on this chart and based on this list that he can share today. Jan, are you here? Can you share your screen for a bit?
Yes.
Okay, let me stop
presenting. Okay, entire screen. Cool. You should see my screen now.
Yes.
All right. So what we've done is we've used a bit of a lesser known in crypto method, not really a backtest, but what is called an event study. And what this does is actually, it's a simple idea. It's basically looking at, for every signal, for every project, you look at what happens before and after the signal is triggered, and then you average over that. So what you see here, for example, is the average behavior of the of all the coins, basically, whenever they hit the top 3 in trending words, whenever there is like this threshold of chatter being triggered. And basically what you can see, like on the x-axis, the 0 is basically the time of event, and then you can see what happens before and what happens afterwards. And yeah, like before kind of makes sense that we have typically a very steep rise in price, which makes sense because that's typically why people talk about a specific project. And then after the signal, which is the interesting part, that we actually do have a strong decline in price on average. In this case, what we see is that after around 12 days, in this case, we have a minus of 8 to 9%. So this can actually be used not to spot buys, but really to maybe see this as a sell signal or even a short signal. Yeah, you can do additional stuff like try to exclude the market to get a bit of a better picture of, is the market actually having some influence? And when you remove that, the orange line is the same behavior basically with the market removed, and you see basically the same thing is happening. Now we will a little bit less of a drop, but not that much. Yeah, and aside from these automated signals, in this case, I think we used like almost 200 signals that we tested that were triggered historically. You could also try the same method for whenever we talk in our insights about this metric and potential sell signals. And we also test this for whenever someone talks about a potential sell moment in our insights. And we can do the same thing and basically see that here we drop even lower after the signal, in this case, the insight published, is being triggered. And here after 12 days, we actually have something like minus, let's say 17-18% drop. Yeah. Also note maybe that this actually, like this specific method, this event study, gives you an additional advantage in that it not only has a sell signal here basically, or a short signal, but it would also suggest you a good time to get out of your short position, for example. In this case, you would say maybe after 12 days might be a good way or good time to get out of the position.
Yeah.
Yeah.
So basically what Jan is showing here is the performance of our own insights. So if you go to insights.santiment.net, pretty much on a daily basis, we, the Santiment team, and some of our community members write daily, analysis and insights about the market. And very often we will write based on the topics or the coins that we are currently seeing on the emerging trends list. For example, just the last week, I was writing about Chainlink as it was appearing on our top trending words, meaning that, given the fact that it was rallying, the call was pretty much, the top is near, and very quickly afterwards it dumped by about 8%. So what you're seeing here is the performance of our insights, which called the tops in the past. Over the next 10 days, usually on average, the coin that we have, selected to dump is usually dumping by more than 15%. So just a quick plug to read our insights on a daily basis, because we tend to be pretty much on the money when it comes to our top predictions. Okay, thanks, Jan.
Yep, no problem.
So I think that's going to conclude it as far as the social volume and social metrics of ours are concerned. If you guys have any questions about what you just saw, please feel free to write them in the chat, and we'll get to them after the presentation part of the webinar is done. So Max, do we want to maybe just shortly go over some on-chain data and on-chain metrics as well? I think the price DA divergence might be a very interesting model to begin with our on-chain analysis, and then we'll go from there.
Yeah, we can. Actually, I see in the list you prepared also a link. Let's see what was the link, because we mentioned it today.
Yeah, and you can also just briefly introduce the concept of price DA divergences and what it's actually, you know, what the people are seeing.
So we're looking at the same picture. We are looking at the crowd behavior, but now using the different data source, on-chain data. And very simple metric, daily active addresses. One of the most basic one, yeah. We have like 15 or 20, much more complicated, but this is a very basic one, which gives you at times, simple is the best, direct access to the crowd behavior. It shows very similar to the social volume. So daily active addresses is like on-chain volume, very averaged. And the crowd will be super active when the price is increasing, like just look at the screen. You'll see big familiarity, what we saw on the social volume. The same in on-chain. And you can use it as a double check. If you see on both on-chain and social the same picture, it's a very strong signal. They were mostly excited and active on-chain somewhere in this price, around 4. But as the price was pushing and pushing and pushing, the on-chain activity was decreasing, decreasing, decreasing. That's it. You don't want to be in the market at this point of time. Or it's very risky. You have to make sure you put a good entry point, like somewhere around here, and you exit it not so late. So this is a same story taken from a different angle. And as we've also touched link, the social volume lately, yeah, here's the same. Here's the same. So we see here it was a high, it will go down. So you could expect at least a few days it will be stagnative. Yeah, it still can make one more last top, but yeah, you don't buy at this point of time when the price pushed, but nothing has fallen up. You wait, or you go to another coin. That was from actually I will not touch maybe Dino other examples. I look at the time; it's almost half an hour. It will be very similar, very similar patterns. And as we actually opened daily active addresses for all users, you can start using it even with just registered account. Full paid subscription. Yeah. Social volume, I think it's either already closed last 2 weeks or it's been closed, but daily active addresses, we keep it for transparency purpose. We want to show how projects are doing. Now, there is a line, multi-volume approach, and this is what I've just mentioned. We can apply, actually we should always apply 2 metrics, at least 2 metrics together. On-chain volume, let me switch to multi-chart. And yeah, this is what we say. The price tried to keep pushing, activity on-chain is going down, social activity is going down. And actually we can even take volume from exchanges. Yeah. This one was trying to push, yeah, but then for the new top, it did not was pushing anymore. And we can switch from chain to Ethereum. Let it load. Yeah, quite similar picture at the recent top. And actually, it was the reason when we issued last big sell signal around 260 on Ethereum, where price was pushing, but on-chain metrics were going down, social were going down, and trading also kind of didn't follow up or did not increase anymore. Like you see here, when the price is increasing, all the volumes are following. They keep pushing very nicely, and also social and on-chain. And this we call multi-volume approach. So we take volume from on-chain activity, from social activity, and from exchange, aggregated volume from all centralized exchanges. And there you can discover some nice patterns. Yeah, just a small teaser. We might do a separate webinar where we talk more about bottom indicators. So multi-volume approach works nicely for identifying the bottom too. You will see similar pictures that will be a strong activity shortly before bottom, but once the bottom is hit, it will be lower, yeah, on all of these metrics. It's a normal behavior of the humans. They're very excited, or they're very emotional once they realize the trend, be it up and down, or like everyone is in, and everything, understand how serious it is. But the emotions fades away once the really top or bottom is hit. This pattern will appear over and over again. I think that's it from my side today.
Yeah, I think, yeah, basically, guys, what this multi-volume approach is supposed to do is supposed to unify the previously two approaches that Max has talked about. So on, on the same chart, you can compare the amount of social volume, the amount of addresses that are actively interacting with the coin on a daily basis, and the amount of trading volume. And if all of those three indicators that are, by the way, drawn from three completely different sources of information, if all of them seem to be showing the same pattern and be manifesting the same behavior from speculators and market participants, that might be a good time to exit the market if if you believe what Max has pretty much demonstrated today. So the price day divergence, I think, is a fairly basic way to look at the market. And daily active addresses is one of the most fundamental on-chain metrics out there. It's basically just showing the amount of daily addresses that are interacting. That means sending or receiving a coin on a daily basis. Now, we do have on Sanbase some much more advanced indicators that you can play around with and use to kind of figure out the market behavior and the behavior of different stakeholders in the market. And I will now give the floor to Valentin to demonstrate shortly one of those indicators called MVRV and why it has been recently so popular and so powerful as a valuation method for both Bitcoin and a variety of altcoins as well. So Val, if you want to share the screen, feel free.
Yeah. Okay. We are here on Sanbase, where these metrics are available. So let's first quickly describe what MVRV is. So you can see the different MVRVs that we have here on the left, and they're split by different intervals. So first, MVRV in general is a metric that gives you the average profit or loss on the whole network. This was first developed by guys in Coinmetrics, I think. And what it does is that it looks at what price the coins moved the last time that they moved, and then compare that with the current price. And that kind of gives you a measurement whether the current network is at profit or loss given the current price. For example, if some Bitcoin moved 1 year ago, we assume that it was bought at the price that was 1 year ago. And if the current price is double this price, then the MVRV is going to be 2 or 200%. So these Bitcoins will be at profit %. We extend this metric by taking different time frames and taking into account only coins with a given age. So for example, the 30-day MVRV, this one here, is gonna tell you what is the average profit or loss of the whole network, but only taking into account the coins that moved in the last 30 days. And this is nice because it pretty much excludes only any long-term holders and any lost coins. And in this particular case, for the 30-day MVRV, it's going to take into consideration pretty much coins that are constantly moving around. And we can argue that pretty much short-term holders, so short-term traders that are trying to profit from the price swings of Ethereum. A few days ago, that was, I think, on April 6th, I was looking at this chart and I noticed something interesting. And this was after the price crash on the Black Thursday. We reached some pretty high levels of the 30-day MVRV. So On the 6th, it was going at 1.23, which these 30-day altcoins, average profit of the network was plus 33%. And if you zoom out and look at the whole history of Ethereum, you're going to see that actually these levels of MVRV lies like plus 23% high. And it's a kind of an oscillating indicator, because when the altcoins become very profitable at the current price, sell pressure on them. So the short-term holders will be willing to realize this 10, 15, 20, and maybe some of them will be at even higher profit, because here we look at the average at the current price and pocket the profit they're at right now. So when we see that this short-term MVRV is pushing very high, means currently there is a very high risk that the price could be going down at this point. So usually such kind of high levels of MVRV are just not healthy for the current price, and it's going to start moving down. So if we look at see how when MVRV, let me increase this size a little bit, reaches levels of like above 30%, it's actually very, very risky situation. For example, here, that was middle of 2019, reached 35%, and then plus 35%, and then went down. We see it reached 16% before going down. Here it reached 22% before doing a correction, and then continuing to move up, then 31%. So usually levels that are above 20% of this indicator, we are going to see a sizable correction. So we need to be very careful around these times. Here we can see that this short-term MVRV reached the level of 23% at $170. The market corrected, and we went to much healthier levels. We're sitting at 10% right now. At this point, I actually opened a leverage short position when we were at 26th. But I think I did some back testing, and I held this position for a day or something. But then I closed it a little bit too early. I think I managed to realize like 2 or 3% profit out of it. If I kept it a little bit longer, it would be better. But yeah, it was a kind of an experiment. So yeah, I'm not a professional trader, so I couldn't take the best of the situation. But generally, such kind of high levels of MVRV could be an indication that we are at price levels that you shouldn't be actually buying. And also at the opposite end, if we are at the low levels of this indicator, so here you can see it's 0.75 means that loss of the network at this point is like 26%. So minus 26%. These negative positions could be a good time to buy. So here we see minus 26, then there is also 13%. At this bottom, it was minus 17. Here again, like minus 15. So usually around such kind of values, it could be a good indication for like a buy opportunity. You have a level of risk that you can use with this indicator and use it to figure out where we are at the market. And keep in mind, this is for the short-term version. There is also, you can also use the long-term, for example, 1 year MVRV. Here we can see that it pretty much follows the price for this time range. But if we zoom out, so this is a much longer term indicator, see that very high level of that is also indication of a top. So we can see that for the last about 2 years, after the big crash of Ethereum, levels of the 1 year MVRV around 40 60, and again 40% are, so if we say above 40% are a good time to sell your holdings before trying to enter a much better position. Again, like this is the more longer term for, because it covers much bigger portion of the coins that are in the circulation. MVRV is going to cover all the coins that moved within the last year, long-term holders. So I think, yeah, that's pretty much it from me about MVRV. Let me know if you have some questions.
Awesome. Thanks, Val. So yeah, guys, as you can see on Sanbase, you can essentially select the MVRV for only a specific portion of the coins. So basically, you can select the MVRV for the coins that have moved in the last 30 days, coins that have moved in the last 365 days, for Bitcoin, even the coins that have moved in the last 10 years, basically almost the entire lifespan of Bitcoin, because it's very important. There can be vast differences in the ways and the profit loss margins between the long-term and short-term holders, and those differences quite often can have a very strong impact on the short-term price action for a set coin.
Yeah. Also, another thing that you can use this MVRV for, shorter lived coins. Coins mature, the fluctuations in the MVRV is going to become smaller and smaller. So initially, it's going to be very volatile. It's going to reach some insane levels. And you can see, for example, for Chainlink, that was middle of 2019, it reached like insane levels of the 1 year MVRV of like 400%. And then the price a little bit more. So it reached almost $3. Then it reached to 360 and going down. And this pattern here about divergence between the MVRV and price, it happens sometimes. Younger coins, it happens more frequently because the market is much more volatile then. The MVRV will be crashing down, but the price will be increasing. And that usually means that these long-term holders are pretty much dumping their coins on the market, but the hype is so big that the price still continues to grow. So we're going to see like short squeeze in the price, but the short-term holders, usually the long-term holders, they have such big bags on the market that the price just can't continue to grow, and then it will start going down. So when you see such kind of divergence, especially at such high levels of MVRVs, you really want to run away from this market or short it or whatever, because it could be an indication of a coming crash. And we can see here then subsequent pumps of Chainlink. Also, we saw now lower levels of MVRV of about 60%, so 1.6. It again. So I would expect that the next push for Chainlink will probably be lower than 60%, because as I said, this the range in which these MVRVs are usually starts to narrow down as the market matures.
Yep. Can I take over, Val?
Sure.
Okay, cool. Yeah, so guys, we are at the 45-minute mark, so I'm not going to be, I think we're going to leave some of the additional sort of metrics that we had prepared for a follow-up email for everybody that has joined this webinar. We'll basically send you an email with the additional, we had some more ideas and more metrics that we wanted to discuss, maybe for another webinar, but also we'll just send you a nice email with them. Now, one great thing about Sanbase is that you don't necessarily need to rely on the charts that we have prepared and the metrics that are currently available on Sanbase. You can also do a bunch of things yourself by using our raw data and tapping directly into our data streams. Now, with Sanbase Pro in particular, which is the pro version of app.santiment.net, not only do you get access to all of the metrics that we've discussed today and many more, so I think over 30 different on-chain metrics, all of the social metrics and social sentiment metrics that we haven't even talked about today, but you also get access to a spreadsheets plugin called SanSheets, which basically what it does is it lets you create your own models using the social and on-chain data that Santiment has collected. So very shortly, Brian, sorry, if you can share your screen and show one example of a template that was built using this SanSheets plugin, so that we can show people how they can use it themselves to develop new models and new strategies using Santiment's data.
Yep, thanks, Dino. I'll go ahead and share mine. All right, everyone can see this okay?
Yep.
Cool, cool. So what we're looking at right now is the daily active address versus price divergence model. As we heard earlier this call, daily active addresses are the measurement of distinct addresses making transactions in a given day. And then we plot those over time to see exactly how that metric is measuring up versus its own history. Right now we're looking at Bitcoin. I'll also show you Ethereum in a minute. But basically we look at Bitcoin's historical daily active addresses over time and measure how that metric has done versus its price. So we have an average amount that we expect to see when a price is at a given point. And when we see these green signals here, that basically is our model letting us know that there is an excess of daily active addresses compared to what the price is at a given time. And then vice versa, when we see these red signals here, that's showing that we are having a deficit and that the price is looking a little overinflated compared to daily active addresses. Now, by no means is daily active address the exact end-all be-all measurement for where price should be, and we'll see over time there will be plenty of variations, but essentially we are going to see that there is a commonality between where daily active addresses go for any asset and where prices eventually go, because the main purpose of this model is to show that the prices tend to follow quite closely over time, and we've seen that historically. And I'll show that very quickly on Sanbase and SanData as well. But what we're seeing now is basically a measurement based on a back-tested strategy. How these buy and sell signals have basically fired off, and we can look historically, it has rang pretty true. Generally, the more bunched up these signals are, the better. So when we see 3 here, for example, that's a sign that it's a pretty strong signal. When we see 1 only like this, it's a little lesser so and can be a little more inconsistent. It, of course, happened to work out here because right when the sell signal came, the price dropped off. But we generally look for bigger bunches like this one, where the price bottomed out in late 2018. We saw that it continued to decline as they were firing. We saw 1 huge signal here, and then it basically bottomed around 32, excuse me, and then started to rise. We saw another sell divergence here, and then a buy. So this is actually interesting. We saw back in 2018, late 2018, early 2019, basically the divergence go from a buy divergence straight to a sell divergence, and then a buy, and then a window of neutrality where the price started to rise up. And then in mid 2019, from April to June, we saw that there was a deficit of daily active addresses on this huge rise, which is interesting. So especially when it came up here and up here at the very top, that's when these sell signals started to get fired off pretty much on a daily basis for plenty of July, back when the price started to top and sink back down. And then most recently, this is what you guys will mostly want to be checking in on, is the right side of this graph. We saw that there was a huge bunch of very tall buy signals, the highest we saw within this 2-year span, to show that this sell-off on Black Thursday was a bit of an overcorrection, and that we were still getting plenty of daily active addresses making transactions on any given day. So this was showing that we were likely way oversold here, and sure enough, the price bounced back up. We got, actually recently above 7,000 to about 72, and now we're straight back to a few sell signals. Now I'll zoom in here just to show, how compressed these sell signals are on a daily basis. So we saw here, they were coming pretty much every day. If I zoom in like granularly here, we saw that the 14th, 15th, a little tough to drag with the mouse here, but the more you zoom in, the easier it is. 16th, pretty much every day, I think, for about a week here, right after Black Thursday hit. Then they started to spread out as the price rose, because the price was alleviating the pressure that was being brought on by those excess daily active addresses. And then here recently, once we topped to over 7,000, that's when daily active addresses were basically saying, yeah, we aren't making that many transactions per day. So it was basically saying we need to pump our brakes a little bit. And sure enough, the price sort of followed suit and fell back to 6,700. So all in all, this is a very, very good and useful tool. Like I said, not the end all be all to tell you what prices will do. You can get faked out like we saw here and see it just continue to surge. But in general, we'll eventually see that these signals are becoming so consistent on a daily basis that the price will have to eventually fall unless daily active addresses just continue to increase as the price increases, if that makes sense. So really quickly here, Ethereum as well. We have a bit more of a stringent curriculum to get a signal to fire off for Ethereum, and we have it at about 0.5, which is almost twice as much as Bitcoin. This is because the correlation is a little bit harder to track consistent profits when buy signals go off and consistent, price retractions when sell signals go off, because it follows the price of Bitcoin to an extent, as you probably know. But what we have seen is, when the price did bottom, just like Bitcoin, we saw plenty of buy signals. Then the rebound, plenty of sell signals. That's identical to what Bitcoin did. Then we saw a long stretch where it was basically neutral. Ethereum topped off, I think, like 360-ish or so before retracing. Come January, that's when prices started to rise, but we weren't really getting much here. We just had one lone signal for buy, one lone signal for sell, and then Black Thursday happened, and this was even more amazing than what we saw with Bitcoin. There were an excess of daily active addresses for about 3 weeks after Black Thursday happened, and this was saying Ethereum was way oversold. It got down to about 85 at one point, the day of Black Thursday, before basically surging back up. And now, just like Bitcoin, it's showing a few sell signals, not quite as consistent as the buys that were here, but a few. So this is something to keep an eye on. And in general, you'll want to watch for what the rightmost signals are showing, and I highly recommend it. We have a Academy article here, which you can look up just by going to academy.santiment.net and looking up daily active addresses. It'll give you a brief explanation of how it works. We also have an article written by the creator of this template, Jan, where he talks about basically the on-chain trading strategies you can use, and he goes into detail of exactly how it works, why it works, and why you should use it. And of course, as we showed earlier on the call, you can check daily active addresses for any asset, Bitcoin, Ethereum, etc. Just click on daily active addresses over on the right, and you'll see them compile. You can also see them, if you're a SanData user, on SanData. So yeah, that's a recap on this template. We have several other templates as well, so feel free to ask about them, and we will be happy to share them with any of our Sanbase Pro users. And Yeah, that's all for me.
Awesome. Thanks, Brian. So, guys, really quickly, this is going to conclude the. Yeah, go ahead, Yura.
Yeah,
Is that you?
can I couple words?
Sure.
Just only about Sanbase. I present my screen.
Okay. While you do that, I just wanted to make sure to let everyone know that everybody that has sent us an email for this particular webinar will be getting, even if you're not a Sanbase Pro subscriber, will be subscribed to our, if you want, of course, to our updates on the price DAA divergence. So we send automatic emails as soon as the sell or buy signal triggers based on our price DAA the template and price DAA model. So you can get real-time access to this data by buying Sanbase Pro and getting access to the SanSheets template that Brian has just shown you. But even if you're not a Sanbase Pro subscriber, you will be getting real-time updates on this particular model. So Yura, go ahead and show us what you wanted to show. Just,
okay, thank you, Dina. I want to present our app on Santiment.net again, but only from hidden features, because actually app.santiment.net is a very advanced tool that can help you discovering and exploring new tops and bottoms and new opportunities during your investment decisions or trading decisions. Anyway, for example, we have a comparison tool, and you can, if you know, a couple weeks ago, crypto market was very correlated with general market, with gold, with S&P 500, and you can compare Bitcoin price with gold on our tool. With this tool, compare, choose gold, find this, and price, and you can see correlation between gold from general market price of Bitcoin. We can compare not only with but S&P X price. You can see this correlation much better. It's like S&P 500 line looks like moving average for Bitcoin, if you know. Also, we have explain metrics button, and it's very useful. For example, if you try to find daily active addresses, and you can't understand what does it mean, daily active addresses or any other metrics, you can hover this metric and see some description and some videos sometimes. But also you can click on explain metrics, click on this button and choose daily active addresses. And you can see related insights where our analytics try to explain how this metric works. You can see general time bounds for this metrics available since last computed at, and you can see small which you can show very deep documentation about how this metric works and some more information for you. And you can use our comparison tool, not only compare with price different assets, but you can compare any metrics with any assets on our platform. Also, some users don't know, but you can viewport, you can collapse left side, or you can, for example, make full screen mode for your chart to make better screenshot, or maybe if you are a journalist, for example, or you can research with better visualization. Also, people don't know on our platform we have very advanced way to create alerts for many of our metrics. On basic platforms from in old investment market, you have an option to create alert for pricing movements. For example, price rise above absolute value, or price moves up 10% or 50%. But on our platform, you can stop such such alerts not only for pricing, but for example for social volume or daily active addresses. And if you heard before, social volume is very good for detect local top. You can set up a special alert when social volume moves very fast for your asset, for example, for Ethereum or for Chainlink, and you will get notification in Telegram or email or push notification on our platform. It's very useful. We have much more hidden features, but I think it's enough for this talk. And you can continue.
Thanks, Yura. Yeah, I don't think even 3 hours of webinar time would be enough to showcase everything that we have on Sanbase. But before we go into the questions, just one final thing to mention to you guys. Most of the things that you have seen today, some of the metrics like daily active addresses are available even if you're a free account subscriber on Sanbase. You will be able to see full historical and real-time data for daily active addresses. However, most of our metrics, especially on-chain metrics, are semi-paywall, meaning that the last 2 weeks are by default hidden unless you are a Sanbase Pro subscriber. So for everybody that is currently watching this webinar and participating in it by asking questions or just generally, chilling in the chat, you guys can use this code SANWebinar by going to app.santiment.net/pricing. So actually, maybe I should do it in another window that's not that I'm not already logged in. But basically, when you go to the pricing page or the checkout page on Sanbase, there will be a place where you can enter this promo code and get 30% off your Sanbase Pro subscription. Sanbase Pro subscription costs $49 a month, and not only do you get access to all 30 plus on-chain social and development indicators, you also get access to exclusive insights created and researched by the Santiment team, which you have seen the performance of earlier in this talk. You also get unlimited access to the Santiment spreadsheets plugin that we have briefly demonstrated, as well as 10 different pre-made templates, one of them being the price DA divergence, and 9 other models that we have developed in-house in order for you to analyze the market and try to predict the prices of certain cryptocurrencies. And much more is included in the Sanbase Pro package. So if you guys want, I definitely strongly urge you to check it out for a month. Use the promo code, get 30% off. I guarantee that you will love it and stay for a few more months at least. So that's going to be it as far as the presentation part of this video is concerned. Now, Gary, if you want to jump back on the call and let us know if we got any questions and if we can help our audience in any way with our on-chain and social metrics, now's the time.
Yeah, thanks. So Alan is asking, why are you selling this type of service instead of using it yourself for an algo trading business?
Max is gone from the call, right? It's usually the best. We get this question fairly often, and I think Max describes it the best. Val, do you want to maybe chime in here? Why are we not using this as a algo trading service?
Well, I can tell some from my perspective how it goes, and maybe you can add something on top of that. So in order to use this data, you need to do also proper risk assessment of the thing. So it's one thing to look at charts, it's another to make the actual trades. For example, from my perspective, I'm a kind of a data scientist and technical person. These metrics to a large extent. I need to say here that there is not like a single metric that is going to tell you like, okay, at this point just buy, at this point just sell. You need to really take into consideration also other, and you need to have experience as a trader. If you don't use this metrics properly, most probably, well, trader than not using these metrics, but also you'll be taking, I guess, too much risk. So recently I've been trying to use our metrics to do trades, and well, it takes quite a bit of time still. So being a trader is kind of a full-time job. So yeah, I mean, it's having the data is one part of the whole puzzle. Another part is executing the actual trades, managing your portfolio, and yeah, knowing how to trade generally. So yeah, that would be from my perspective. But I would say that more and more we are, I don't know, like at least publish some nice backtests around all these things. And backtests could be misleading in many cases. So yeah, like I think that would be the answer from my side.
Okay, thanks all. Yeah, I think you know there are some things that are in the works that will maybe get us a bit closer to that sort of service. Stay tuned, wink, wink. But yeah, for now, I think it took a lot of time to even this entire platform was developed from the ground up. So some of the things that you are seeing today in this webinar, for example, the backtest that we've done on our emerging trends, this has been done very recently, almost just a month ago. So we are still, trying to develop and find new ways and cement the ways that actually work using this on-chain and social data. On-chain technology, blockchain technology and on-chain information is still very young. So a lot of people are still scrambling to figure out what the best ways to use them in a trading environment are. I think we are one of the companies that probably have an edge in that sense, but definitely not, I would say, 100% there. But some of the things that you have seen today for us, I think a lot of people in this call and a lot of people in the Santiment team are traders themselves, not full time, just because there's not enough time, but many of us do use our metrics to inform our own trades, and so far, I haven't heard too many people complain. So yeah, Gary, do you have other questions for us?
Yeah, so another question is Max is asking, I saw that XRP is in the insights. Can you show the on-chain data and what conclusions you can draw from Ripple data?
Oh, okay. Let me present my screen. Let's see what XRP has been doing recently. So for XRP specifically, we have a number of both on-chain and social metrics. Let's take a look at, for example, the last 3 months. Maybe I will exit the night mode just to be sure. So ideally, we would only focus on the metrics that we actually talked about today, because, for example, I would also look at things like token age consumed, but for the people that are not fully familiar with the metrics, maybe that's better left for another time. So for example, let's look at the daily active addresses and the network growth, maybe just daily active addresses for XRP. So this is the social volume for Ripple over the last 3 months, as well as the amount of daily active addresses on the Ripple blockchain over the same period. So actually you can see social volume has been growing over the past few days. We could go more into detail as to why, and with SAN data, you can actually go message by message of all of the mentions of Ripple or any other topic that we have, collected, and you can go and browse every single message that is been received by our database and see exactly why Ripple is trending and what people are saying about it. But I don't think we have time for it at the moment. In general, it seems that there's been over the last few days an uptick in the social volume for Ripple-related chatter. And as far as daily active addresses, there hasn't actually been that much. So there's been this, and we talked about this on our Friday calls. By the way, for everyone that's joining this call and once likes this type of discussions, every Friday basically we have these weekly community calls where we Sentiment team kind of comes together, and for an hour we talk about what we're seeing on the charts. And we talked about this discrepancy in the daily active addresses for Ripple just recently, where there was this huge spikes in the amount of daily active addresses for Ripple in February. And you can see that it has correlated very often with the top. So here at the very end of the rally, and then here at the very end of this one. So basically pretty much consistent with what Max has been saying earlier during this webinar. But recently, if we look at the last month, yeah, it's actually been trending downwards ever since. So for now, I wouldn't really put much faith into Ripple's short-term impact, at least based on the daily active addresses and the amount of value that is being transmitted on the network. Do we have transaction volume for Ripple as well? Yes, we do. So here we are looking at the on-chain transaction volume for Ripple. Essentially, what you're seeing here, guys, is the amount of, or aggregate total amount of XRP across all transactions that happened on the network on a given date. So if we look at the last 3 months, we also see that the amount of Ripple-related transactional activity on the network has been trending downwards as well. So there seems to be, certain decline in general network activity related to Ripple over the last month or so, which isn't necessarily a bad sign. But if the price is hoping to chart new highs, it usually needs on-chain and network support in order to do that. Val, are you seeing anything else on your charts that we? Okay. How about now? I seem to be seeing some movement.
Negative.
No?
No. Oh, yeah. Yes. Now it's
We're
live.
back?
Yes.
Sorry about that, guys. The OBS, runs in mysterious ways. Sometimes the streaming software works perfectly, and sometimes it just bugs out for no good reason, and we're not even sure if the stream runs or not. So I think for the last 5 minutes or so, the stream was off. I apologize about that. But Gary, you said we had one more question to answer before we kind of skedaddle, and we'll send in updates to everybody that's been watching the stream afterwards, basically outlining everything that we discussed today anyway. But before we end, Gary, that final question?
Yeah, the last question. So right now, the MVRV over a year is good as of today for Ethereum.
Okay, let's look.
This is the 1 year MVRV.
Yeah.
Okay.
So yeah, can you guys see my screen? Yeah, you can. I'm presenting. So Val, here we're looking at the 365-day MVRV for Ethereum. Oh. Okay, maybe it's better if you share the screen, Val, because it seems like things are breaking up on my part.
Yeah, maybe something with the internet connection.
Yeah,
Let
could
me
be.
switch.
I can share if needed.
Okay. Yeah. So currently the 1 year MVRV for Ethereum, it's at minus 14%. So that's this is good in the long term. So if we open in the last year, yeah, we see that at the last bottom it was minus 30, and then on Black Thursday it was minus 40. So yeah, I mean, right now it looks to be okay. If we see values pumping up to something like 45 or 60, 70%, like here it reached 73%, here it reached 45. Yeah, so right now it looks at the negative side, so the risk should be lower right now if you look at the long-term trend.
Yeah. I think it's similar with the short-term MVRV for like 30-day. Currently, it's around 1.10, I think, which means that on average, short-term holders or those that have kind of gotten into Ethereum over the last 30 days, 1.11, 1.09, are about 10% in profit, which historically isn't like too much of a danger level. So we've seen a correction come after the short-term MVRV ratio came around 1.2, meaning that short-term holders were 20% on their initial investment, and usually historically that was an opportune time for them to dump their bags and exit the market. At these current levels, where we can see a push downwards, which might be a even better time to accumulate Ethereum, especially when you're looking at MVRV negative values. So anytime that MVRV falls below zero indicates that the coin on average is undervalued, and it has very often proven to be a good time to accumulate said coin. At these current levels, I think we can go either up or down without too much sort of too much resistance. So I think much like the entire market, it shows sort of indecision, right?
Yeah. Also for Bitcoin, the level seems to be a bit lower, so they look even better there. But generally Ethereum and Bitcoin are quite correlated. So I mean, right now it seems that the risk of a huge dump is much lower, and there is a possibility for increase in price.
Okay. Thanks, Val, and thank you everyone who stuck by even when the stream went down. I'm sorry that we had some technical difficulties in the end, but thank you so much for sticking to it till the end. Once again, San-Webinar is the discount code link that you can use to get 30% off your Sanbase Pro purchase. You will also be subscribed to our price divergence model and will be getting live updates regardless. If you like what you heard, if you liked what you saw today in terms of metrics and indicators, feel free to join our Discord channel where we talk about this stuff in our trading channels pretty much on a daily basis, and also join us for our weekly calls on Fridays at 3 p.m. So basically the same time when this webinar started, only on every Friday, we get around and we talk about the most recent events from an on-chain and social media perspective and what that might do to the short-term prices of the coins involved. So that's going to be it for us today, guys. Thank you so much, and we'll talk to you soon.
Thank you. Bye.
Thanks for joining, guys. Bye.